Good morning, options traders, and I wanted to post a little bonus video for everyone this morning based on a poll, little survey that I did yesterday for the group. And the survey was in response to a news article and about Taco Bell partnering with Beyond Meat. And one of the traders said, well, it looks like the demand for beef is, on its way out. People just don't want beef anymore. Well, if that's true, the question was, what happens to the price? And most people have a pretty good idea, but I'm going to show you that the answer might surprise you. So here was the article. Again, Taco Bell partnering with Beyond Meat. And we've seen similar headlines in the past. We saw it potentially with McDonald's. We saw it with potentially Dunkin' Donuts. And who else? Burger King was another one. But a number of articles coming out which were actually very good for Beyond Meat. So again, the idea is that if the demand for beef is falling, what will happen to the price? So that's our premise. And so the reason I wanted to post this video is I think it's a very important idea for traders to understand that markets are dynamic. Yes, you could certainly infer that the demand for beef is falling, but it's not only the buyers who are reading these headlines. The suppliers are as well. So the beef producers also react to the news. Why? Well, they're in it for money too. You are too, as investors and traders, so you're not the only people responding to the news. So if we're going to make an assumption that consumers are backing away from beef, it's only logical that we should assume that the future beef supply will be reduced too. You have to understand both sides, the supply and the demand side, to come up with the right answers. You can't just look at half the equation. And again, this is really what most people do. They'll say, oh, people don't want beef anymore, therefore the price is falling. So here's the answer. Here's the way what you need to do for your analysis. Let's go back to a basic supply and demand chart that you might remember from your basic econ class. And along the horizontal, we have the quantity, and on the vertical, we have the price. So we have what's called a supply line, which just shows how the producers or the suppliers will respond to prices. So notice that as the price goes up, we trace a line over, they're going to supply this much. But if the price gets up even higher, trace a line over, they're going to supply this much. They're going to supply more as prices rise. And that makes sense. Wouldn't you do the same if you were the supplier? As the price rises, you'd get motivated to produce more. That's why this line slopes upwards. The consumers, on the other hand, work in the opposite fashion. So notice that if we're up here at a very high price, we trace a line over to the blue line, yeah, we're only going to buy this much. But if the price falls, maybe down to here, we look over this way, see now the quantity that people want is going to increase. So buyers respond to lower prices. So this little intersection right here where X marks the spot is what we call the equilibrium price. And at that price, everybody who wants to buy some can, and everybody who wants to sell some can. There's no surpluses or shortages. So this would be the market price of beef. So let's just say that it's $5. So this becomes our reference point. But now part of our premise is that the demand for beef is falling. And the way that we show that is to slide this blue line downward here to the left. So let's just pick a spot and say that it falls down to here. See, now we get a new X. So if we look, we get a lower price, but we also get lower volume or lower quantity that people want. So if the demand falls, you're going to see a reduced volume and you're going to see a reduced price. But remember, it's not just the consumers who respond. So the suppliers are going to react as well. And if the supply is reduced, we show that by sliding this line upwards to the left. Now, if I slide this red line somewhere in this area to where it just meets the $5 price, yeah, the price could stay the same. If the red line moves somewhere below this point, then the price definitely will fall. But what if the supply gets cut by a bigger margin? Maybe the suppliers overreact and everybody says, oh, I'm not producing cows anymore, and everybody exits the markets, or at least a good portion of them. Now look where our X is. See, in this case, we might end up with a price increase, but we will definitely end up with a quantity decrease. So here's another thing to look at. we're going to look at the change in the demand, the change in the supply, and the change in the price and the change in the quantity. Our first assumption was that the demand falls. And if that's true, what happens to price? It drops. What happens to the quantity? It also drops. That's assuming the supply stays the same. Now let's take a look at our second assumption. If the supply falls with the demand equal, what does that do for price? That increases price, but it decreases the quantity. So notice over here that the quantity, regardless of whether it's the demand that falls or the supply that falls, is going to fall. But look over here. See, over here we can't say for sure. We could make an argument that the price will fall. We could also make an argument that the price will rise. See how these arrows are pointing at each other? They're not pointing in the same direction like this over here. It gives us a conflicting answer. We're not really sure. So the only thing that we know for sure over here is that the supply will fall. But as for the price, we'll have to wait to see how the suppliers react. But the main thing to understand is that as investors, when you're trying to do your analysis and you're reading headlines like this, don't just pick one side of the equation and say, oh, because of demand, therefore this. You have to say, if demand is going to change, how will the supply change? And now try to come up with an answer. Because if you don't, you might place a trade and be on exactly the wrong side of the market. So for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a brand new technical analysis course. It's all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find the link in the description below.